obviously trading AI is great, but it's not applicable to all markets.
Yeah, that's correct. It's very unfortunate actually for us. So let me tell you a little bit about the markets to which it is applicable. Obviously, crypto comes as number one. Comparing to traditional markets, cryptocurrency, they have the best APIs. And when you're building something that's automated, obviously you want a great API. You want really clean data, you want data free, and you just want a really high throughput. That depends on your time frame that you're trading. You might be trading on something that's like a 5 minute, then it doesn't really matter. But you sometimes might be trading on like microseconds. So obviously like good API and an easy way to build an API is going to decide on whether you can automate in this market or you cannot. So speaking about crypto, there are exchanges like Binance, OKX, Bybit, all of them, because we built that awesome APIs. Like incredible, super simple to build. All the data is just so high quality. They have the entire history. You never have to think about it. And now let's think about like stocks, right? So if you are, as a regular citizen, you want to just trade stocks, number one, you have cap requirements. And for the majority of brokers, cap requirement is $30,000. It needs to be on your account. So if you're an average Joe from whatever, like Indonesia, right, you cannot even borrow enough money to put in that account.
You're priced out of the market.
You're priced out, right? That is why we see that I think half of new traders coming in right now are coming through crypto. The amount of crypto holders is bigger than people, I think, realize. So 1/10 of the entire global population holds crypto. That is actually close to the same for stocks. So we have 600 million to 800 million people worldwide holding stocks and around 740 million holding crypto. Now another market, commodities, only around 20-30 million people worldwide hold commodities. Why? It's the same barriers, right? Institutional barriers where regular people cannot enter because cap requirements, too difficult, bad APIs, and sometimes not enough liquidity. So obviously cryptocurrency becomes the primary choice for trading when people are just entering, because you can start off with as little as like $5, right? And you can go in and do your first trades and feel what it's like. And then some of them switch to stocks and some of them stay in crypto. But reality is that the current infrastructure for traditional markets is simply not ready for full automation. I've spoken to a few of my friends who are running big hedge funds, and they're telling me, yes, we do have automation, but the final stage of automation of actual trade placement is still done by a human. Places like JP Morgan and all these big banks, they do have API, but the documentation and the API reliability is just not there at all. Not there at all. So even though you might have automation in the financial market, traditional financial market, in many cases you would still need to place the trade manually. And whenever you introduce a human back into the equation, that's when mistakes start happening.